Did you know that renowned investor Cathie Wood is still incredibly positive on Tesla shares despite the current economic uncertainty? Wood expressed her prediction that Tesla's stock will increase 5 times its value by 2026, despite the company having barely recovered from its losses from the previous year. You wouldn't want to miss this, for sure. In a tweet on January 7th, celebrity investor Cathie Wood stated, "The EV opportunity alone is enormous." This is a reaction to the tweet that Cathie shared, which was sent by Sam Corris, our Senior Director of Research, Autonomous Technology, and Robotics. Corris stated in the tweet that Tesla should be among the best positioned to weather any cyclical slowdown for vehicles, as it has in the past, due to its margin, superior drivetrain efficiency, and low battery cost. The ARC CEO tweeted, "It can be the first to lower prices, which puts pressure on other automakers." In response, Cathie Wood stated that Tesla did not require autonomous ride-hailing in order to succeed, citing research by ARC, Sam Corris, and CFA Tasha Keeney at ARC. Wood presents ARC's analysis and claims that the Tesla EV possibility alone is huge, removing autonomous driving and any form of ride-hail, which we believe will drive over 60% of Tesla's value over the next 5 years, tweeted Tasha Keeney, Director of Investment Analysis and Institutional Strategies at ARC. Our 2026 price target would become roughly $500 a share post-split, based on EVs alone, more than 4x increase. From current price, it should be mentioned that in the middle of April, ARK Invest released the Tesla value model. In 2026, ARK's upgraded open-source Tesla model predicts a value per share of $4.600. But take note that the Tesla model was released before Tesla's August 3-for-1 stock split. Tesla's prospective robotaxi business line is a major driver, generating 60% of predicted value and more than half of expected EBITDA, or earnings before interest, taxes, depreciation, and amortization, in 2026 across the simulation set. According to ARK's updated open-source Tesla model, they project that, albeit at far lower margins than the robotaxi revenue, then electric vehicles would account for 57% of the company's sales in 2026. ARK has revised the way the robotaxi industry fits into the model due to their growing confidence in Tesla's potential to achieve fully autonomous driving. Despite their earlier predictions that Tesla would never be able to introduce autonomous ride-hailing, they have since changed their minds in response to recent encouraging developments from the company, and now project that it will come in 2026, 4 years later than Musk had anticipated. Additionally, they predict that in 2024, Tesla will provide autonomous ride-hailing services. Nonetheless, Tesla fails to commercialize robotaxis within the 5-year period in 9% of their model situations. The projected financial results for Tesla are subject to the year of introduction, provided that robotaxi commercializes within the projected window. The revised model by ARK Invest also improves Tesla's capital efficiency. When the Model 3 was scaling up in 2017, Tesla's capital investment per incremental unit of capacity was approximately $84,000 by the time the 2017 model was released. That number was closer to $7,700. According to their estimates, Tesla will invest between $6,000 and $8,000 and $8,000. Given its significantly higher capital efficiency than anticipated, it's probably realistic to project that Tesla will invest between $2,000 and $7,000 for each additional unit of capacity by 2026. The ARK Invest team also mentioned that by 2026, they believe Tesla's robotaxi would have completely changed the industry. The expected value, in the event that Tesla introduces robotaxi successfully, is the mean of the 1 million simulations. The simulations in question are quite susceptible to the year that Tesla ultimately introduced robotaxis. Tesla launches a vertically integrate human-driven ride-hailing service, but does not establish a robotaxi network in the majority of ARK's lowest price per share scenarios. In other situations, Tesla does not launch either service. The firm hasn't made a formal commitment to start offering human-driven ride-hailing, but ARK has already discussed the tactical and strategic benefits of doing so. Crucially, ride-hailing services operated by humans have the potential to generate a healthy, steady income stream prior to Tesla introducing a fully autonomous service. ARK anticipates that Tesla's human-driven ride-hailing cars would eventually transfer to the autonomous ride-hailing network in the event that the company offers a human-driven ride-hailing service and solves for completely autonomous driving. While working toward complete autonomy, Tesla may still introduce a human-driven ride-hailing car if it is unable to establish a robotaxi service in the allotted 5 years. However, recent tweets from ARK's management revealed that Tesla's valuation over the next 5 years post-split would become around $500 per share based on EVs alone. Even in the absence of autonomous driving and any kind of ride-hailing, this represents a more than 4-fold gain from its current price of about $123 per share. We think that gas-powered vehicles are going to be obsolete within the next 5 to 10 years, and the traditional auto industry has to figure out a way to migrate into electric vehicles, Wood reportedly stated in a Yahoo Finance interview. Tasha Keeney, a CFA with ARK Invest, explained why ARK has a favorable opinion of Tesla in a separate interview. In an interview with CNBC Squawk Box, Cathie stated electric vehicles are just single-digit percentage points of overall auto sales. So we have to remember that it's still an early market, but we do definitely see Tesla as one of the market leaders, both in electric vehicles and in autonomy. When asked what she thought about Tesla in 5 years, Cathie Wood responded, most other auto manufacturers, unless they want to lose money on their cars, most are not going to be able to keep up with or to reach Tesla's combination. Wood asserted that Tesla has a distinct advantage over other automakers. According to her, Tesla is the greatest option when comparing automobiles based on power and range rather than brand. Nevertheless, she claimed that the most well-known automakers, including BMW and Volkswagen, have made great strides in recent years. Simply put, in terms of power and range combined, Tesla is much ahead of them. According to Wood, most other automakers will not be able to match or surpass Tesla's combination unless they wish to incur losses on their vehicles. Wood stressed how crucial that is from both a performance and a range perspective. Regarding big businesses competing with Tesla in the manufacture of electric vehicles, Wood's response when questioned is, they are failing miserably. It's not the same with branding. Although there is a strong brand loyalty among consumers towards these other automakers, Wood believes that as buyers become more interested in the specifications of electric automobiles instead of gas-powered ones, that the market is shifting. She claimed that while brands alone might still be able to influence them, they won't have as excellent of an electric car as Tesla would. Cathie Wood continues to accumulate Tesla shares despite a persistent sell-off that is depressing her flagship fund, demonstrating her unwavering belief in the company's future. In fact, on January 10th, ARK funds purchased 100,982 shares of Tesla for a total of $12 million, even after going on multiple dip buying sprees over the previous few months. Previous to that, according to daily transaction reports, Wood's flagship ARK Innovation ETF bought 145,000 shares of Tesla for $15.7 million at the automaker's closing price of $108.1 on January 3rd. ARK's autonomous technology and robotics ETF also bought 31,000 shares of Tesla for $3.4 million. The acquisition in question is estimated to be worth $19 million. Those transactions were made at a time when Tesla's price was down 12%, the most in a single day since September 2020. As of right now, the stock has dropped about 75% since November 2021. Why have so many investors remained with Wood, you might question? It surely doesn't hurt that she had one truly amazing year. In 2020, ARK Innovation increased by 153%. Before a severe sell-off in 2022 erased ARK's gains, Wood, who invests in businesses that use disruptive innovation, made millions during the early stages of the pandemic amid the spike in Tesla and other favorites. Additionally, Wood has gained a bit of notoriety in the financial industry by making frequent appearances in the media. She breaks down financial ideas so that a beginner investor may comprehend them. Cathie Wood of ARK claims that there is still a long way to go for Tesla shares in a recent Barron's piece. Wood stated that efficient production and the emergence of autonomous taxis will be two reasons why Tesla will surpass other automakers. Based only on its EV business, ARK's 2026 price objective for Tesla stock would be approximately $500 per share, more than 4 times its current valuation. The forecast has been modified to account for the August 25th, 2022 3-for-1 stock split. This provides further perspective for the $4,626 pre-split price objective that the company declared in mid-April 2022. Tasha Bikini, an analyst at ARK, pointed out that the company is eliminating ride-hailing services and autonomous driving from the valuation framework. Over the next 5 years, the company projects that these two elements will account for over 60% of Tesla's value. She went on to say that the $500 per share estimate represents a rise of more than 4 times the stock's current price. If you want to receive updates on Tesla stock, be sure to subscribe to this channel.